Everyone to Canadian Mortgage Weekly. Today is Thursday, June. What day is it today? June
I think it's the
26th,
23rd.
23rd. I've been all over the place today, Sam, but we're really excited today. We have a reverse mortgage episode planned for us all today. And we have Sam Thompson join with us again. And we're really looking forward to today's episode. It's going to be episode 84. Can't believe we've been doing this for that many episodes now, Sam.
Yeah, it's really a big milestone. We're getting up there. We were just chatting today about, getting closer to that 100th episode. We're only a few months away. But yeah, it definitely feels like the time's just flown by that we're already at episode 84.
Absolutely, yeah, episode 84. And like you're saying, time's flying by. There was a memory that popped up on my Facebook memories yesterday. It was one of our first lives back when the pandemic first started. We were just going live and talking about rates in general.
Okay.
And it was a little bit all over the place, but we have a pretty good theme going on these days compared to when we first started.
Yeah, absolutely. We've definitely improved in the way that we've been able to do this and run through information for everybody. And, that's where we're at Mortgage Products Month, and today's covering reverse mortgages, which are really quite interesting. We've seen, the market for reverse mortgages in 2022 has really increased by quite a bit.
It really has, Sam. You're absolutely right. And the reason for that mainly is because we have a big aging population in Canada. A lot of baby boomers are turning 55 plus these days.
Yeah.
And these baby boomers all have houses that have accumulated loads and loads of equity over these past few years.
Yeah, absolutely. I think that's probably been a huge factor in the shift is, when we were looking at, the national home price, and we were seeing that huge spike over the last, year and a bit. That's just equity, especially for boomers. Maybe if they've been in their home, maybe they're mortgage free already, and they have, all this equity now from a house that's already paid off or that they've been living in for quite a while.
Exactly. And if you have the house that's paid off and you're living in it, theoretically, you have your property taxes and your utilities you need to take care of. But no mortgage payment.
Yeah.
But in those situations, I know that a lot of retired folks are in a situation where sometimes income can be a little bit limited, where they are sometimes only receiving an old age security payment each month and a Canadian pension plan payment every month. And maybe there's no other income coming in. And in those cases, Sam, a reverse mortgage can help, and we're going to go into that today.
Yeah, absolutely. We've seen that as a great, reasoning for getting a reverse mortgage, because it does really help, those that are kind of in that pocket where they're, maybe finding that month to month is a little bit strapped between the CPP income and that OAS, old age security. But first of all, chatting, what is a reverse mortgage? So for anybody who doesn't know already, a reverse mortgage is a loan amount that can be borrowed against the equity of the home for anybody who's 55 or over. And again, like you're saying, it gives a way to access some of that equity in their home that they might have seen grow, over the last few years, and be able to use that without, having to get a HELOC or a refinance like we've been chatting in our last couple episodes.
Yeah, it's exactly right. And when you're going for a typical refinance, typically you need to provide letters of employment, pay stubs, and all the income needed to qualify for that loan. But in this case, a reverse mortgage, just being past the age of 55, all those requirements are changed. And it's a different sort of ball game altogether to get that mortgage money when you're over 55.
Yeah, that's right.
Yeah. So let's look at this next. What we can do is when you are looking to get this money, you can take it out all in a lump sum, which is really key. And you can take it out tax-free, Sam.
Yeah.
I know that a lot of reverse mortgage companies will plug that in for you, that you won't be taxed on this income that you're receiving from your equity that you have on your home. Theoretically, it is your money in the first place. So you won't really be taxed on it anyway. And you can set it up as that. And you don't have to make payments on it either.
Yeah, that's right. Yeah, in order to, have it functional, the only things you really have to work on is, again, maintaining the property, keeping property tax and insurance up to date, and making sure that the property is well maintained.
I guess the next thing we can talk about, Sam, is how does this process work? And typically, when you get a refinance in Canada and you're getting a mortgage, one of the first steps is to get the approval. So that's the same thing. A little bit different though. You do need to be the age of 55 or over in Canada to be approved for a reverse mortgage. So there is an age requirement in this case. But once you get the approval, the mortgage company can either advance the funds that you require all at once as a lump sum, or we can set it up as an income plan. So every month you get a certain amount of money for the remainder of your life. And the benefit is, Sam, I don't think they have to pay this money off in their whole entire life.
No, they don't. When you look at a reverse mortgage, again, you don't have to pay anything. You do have the option to set up payments that can be made, while you're receiving the funds from a reverse mortgage, but you're not obligated to pay any of it. So, it sounds a lot like those cash for life scratch cards, right? Where it's $1,000 a week for the rest of your life. You can have it set up so that, it is almost simulating income coming in every month, but that comes directly from your reverse mortgage.
That's great. I'm sure a lot of your viewers probably have questions about all this stuff that Sam and I are talking about today. So make sure you send us a message after the show is done so we can answer these questions in detail and in your specific situation. But another item we can talk about, Sam, is like the uses of a reverse mortgage as well. I know that we recently just talked about it being set up as an income stream. So that's one way we can use it. I guess another way could people use it to consolidate debt.
Yeah, for sure. You could use it to consolidate debt, or even, home improvements. If there's maybe some extra accessibility needs that the house has that it didn't before, you can use a reverse mortgage to implement some of those upgrades to the house as well.
Yeah, that's a good point. And perhaps, you're retired, it's over 55, you're over 55 and you have some time around, you want to do some improvements on your house. I mean, it's a great time to do that. You have your income coming in from your reverse mortgage, you have the time on your hands. You can go do those little projects around the house and keep yourself busy and do that kind of stuff.
Yeah.
Another thing people do is they take that money, not for themselves, but they'll use it to help their child or grandchild with a down payment on a house.
Yeah, I mean, we've seen the term coined over the last few years of, the bank of mom and dad.
Bank of mom and dad. Yeah.
And with, the rates the way they are and qualification for what we're seeing for a lot of buyers, it is a tough market to get into. And we do see a number of clients receiving some of those gifted funds to assist with that down payment amount and alleviate a bit of stress for, maybe it's their children or their grandchildren to purchase their homes.
Yeah, that's a good point. And with those reverse mortgages, the parent never really has to make a payment either. So until they sell or unfortunately pass away, but that's great. A way for their kids to actually get in the market. And especially today, it seems like the down payments are growing and they need quite a bit of money. I know that we're going to be talking about the average price home and what the down payment requirements are for that a little bit later in the show. Well, let's look at the next section. That's payments. So one, no payments required until the home is sold. But we were mentioning that you do have the option to make payments to actually pay down your principal if that's something that you would like to do.
Yeah, that's definitely something that can be set up if, maybe you have the cash flow or want to be paying it back sort of as you're drawing from it as well.
Yeah, that's great. And the last thing, we have the 5 things we're talking about for reverse mortgages today, is the cost. And I wish we could say that it's free to set up a reverse mortgage, but there are a few things that we need to take care of to set up a reverse mortgage properly on your residence, and that's an appraisal. And an appraisal is very necessary. It's about it's a very detailed report on your home that the bank's going to require, and that's a cost up front. However, there's other costs that can be rolled into the mortgage, and those are things like legal fees. So talk to us with regards to how that all works, and we can present you with a proposal that is specific to your situation and your home, and we can provide all those details to you. But reverse mortgages in a nutshell, it seems that it's a great way for folks in their late years to access their home equity and not really have to worry about all the hoops and red tape they need to jump through at the banks these days.
Yeah, it is a simplified way for older Canadians to access some of that equity in their home. And again, there's lots of uses and flexibility in the repayment, as we chatted about.
That's right. It's great stuff, Sam. So if you are 55 or older, give us a shout today to see how much you qualify for on a reverse mortgage, to see how the payments and the numbers would work for you. We would love to show that to you as a no obligation quote. And in the meantime, stay tuned right now. Sam and I are going to go into some of the data points that we usually go over here on Canadian Mortgage Weekly, Canada's weekly mortgage radio news podcast. So let's take a look here. What we got, I'll just make sure that we load this up here. And let's see here if we can get that going. Oh, well, we got the bond yield here.
Bond yield.
Yeah, we got the bond yield. So let's talk about the bond yield today. I know that it's something that's we've been watching on Canadian Mortgage Weekly for a number of weeks here. Tracking higher and higher, but these last few days we've seen a little bit of correction.
Yeah, we have seen a bit of a drop in what we were previously seeing. It had that huge spike at the beginning of last week, I believe. But we are seeing that it is tapering off a bit. It doesn't look like necessarily it'll be a continual drop in the 5-year bond yield. We'll have to track to see where it continues to go, because currently it is at 3.34%, which is down almost I think 10%, or sorry, 10% from what we were seeing it at last week when we reported on the data. So we'll have to track and see, beyond that peak that we saw last week, where is it headed? Will it enter a bit of a tightening range and stay high, or will we start to see that 5-year bond and 5-year fixed rates come down a little bit?
Yeah, that would be really good news for a lot of Canadian homeowners. If it does start to come down a little bit, I know that inflation is peaking at the moment.
Yeah,
they are talking about battling that. So let's see where it goes. Stay tuned here on Canadian Mortgage Weekly. We'll make sure that we cover this next week as we watch what is happening right there. Next, we got the CDOR rate, another great stat we use to measure the competitiveness of the Canadian variable mortgage rates and whether or not variable mortgages are a competitive product at the moment. Because every time I look at a variable rate versus a fixed rate right now, it seems like taking a variable rate on the average size mortgage will be hundreds of dollars less per month.
Yeah, exactly. The variance, although we have seen the Bank of Canada raise the overnight rate and we've seen that influence what the variable rate is, we've also seen the fixed rate rise as well. So although we're seeing, the variable rate, and that's what, a lot of articles are mentioning, and a lot of things we're seeing in the media is the prime rate is increasing, Canada's overnight rate is increasing. But when we look at them in comparison and we track it with the CDOR rate, it is indicating that the variable is still a good option. And again, like you're saying, it, even factoring in some future rate hikes, it does look like it still is a more beneficial option for the average homeowner.
Sounds great, Sam. And we've been getting a lot of questions on this. So I'm thinking it would be a great idea to perhaps make a video on this specific topic, because we can send that out to clients and maybe we can show them the pluses and the minuses of all this as well. Feel free to give us a shout, guys, as you're watching this video, to ask us about CDOR rate and how it affects your mortgage. Moving on now to Bank of Canada rate announcement. We have that coming up shortly on July the 13th, I
13th, yeah.
believe there. Perfect. So that'll be on Wednesday at 10 a.m.
Mm-hmm.
But in the meantime, the last Bank of Canada meeting, we did see a rate increase of 50 basis points, and the current overnight rate's on a 1.5%. Something interesting to note, Sam, is I was watching another mortgage agent make a video, and they were saying that the rates right now are still below the aggressive rate dropping that the Bank of Canada did before COVID hit.
Mm.
So everyone is thinking, rates dropped and now rates are, but they forgot that rates dropped. They are all thinking
Right.
that rates are just going up now. In a
Mm-hmm.
way, they're just going back up to what they did pre-COVID.
Right.
We're still not at pre-COVID levels, but it's interesting to see though
Mm-hmm.
how much of an impact these increases back to where we were at are doing. So it remains to see what's going to happen in the future. I know that with the inflation numbers the way they are at, I think they're even calling for another rate hike.
They are, and I, have seen some articles speculating on a 75 basis point increase. Just as we covered last week that we had seen that news over in the States that they had increased their rate by 75 basis points. So there's definitely speculation that at this next announcement, we will get an increase, possibly 75 basis points. But again, we'll also get that monetary policy, which will help us maybe forecast for the next few rate hikes and get an idea of what Bank of Canada, sort of what their motivations are, and make sure that, target hasn't changed and that we're moving in the same direction.
That's a good point. Yeah, the monetary policy is going to be a really good read for us.
Mm-hmm.
It's always good to receive what the going sentiment is over there at the BMC, and we only get that every second rate announcement, so we really get to see that.
Mm-hmm.
But let's get into the next one. That's the national house price average. I know you're all looking forward to seeing this number, so we'll just give a 3-second pause. And there you go. So as you see here, the national home price in Canada has been declining for 3 straight months, by the sounds of it now.
Yeah, we've seen, that peak was back in February of 2022, where I think the house price average was about 816. And we've seen it drop, almost 13%. Currently, the house price average as of May was 711,000. So that's quite a substantial dip that we're seeing in the house price in a very short window. It's like we're jumping back into fall of 2021 with these prices.
Fall and beyond. Yeah, it remains to see how much further back we will jump. But if you wanted to buy in the fall of last year and thought you missed your opportunity, well, your opportunity is back now. We're back at those fall prices. And from what I'm hearing, if you're looking at purchasing any property in rural areas, areas that are outside of cities, those are sitting on the market a little bit more. So the demand could be less in those pockets. So you might be able to get a better deal in those areas. But at the end, don't listen to Sam and I on real estate data. We're not real estate agents. We're mortgage agents and mortgage brokers. Make sure you talk to your realtor about all that stuff to make sure you get a correct idea about your local market.
Yeah.
With that, I know that's the end of our presentation. And Sam, I know with all that, we have had a pretty decent episode today. We talked about reverse mortgages, being able to qualify for a mortgage without traditional income in your later stage in life, to be able to consolidate debt, set up an income stream, or buy, help your kids buy a property.
Yeah.
Or even maybe even buy or sell a rental property. I know that a lot of people that have reverse mortgages have used a reverse mortgage to put down payment of rental properties so they can have a little bit of additional income in their later years.
Yeah, that's right. We have seen that for sure.
So definitely some ideas for all you folks out there to be inspired about what reverse mortgages could do for you. And just to introduce Sam as well, Sam is a a mortgage agent living in the Barrie area. For 2.5 years now, he's been with Mega Mortgage, originally from Ottawa, Ontario, and moved here and is married, living in Barrie with his wife and puppy. So thanks always for being on this show today, Sam, and sharing your expertise. Looking forward to next week's episode with you, episode 85.
Yeah, it'll be good to join you for episode 85. And again, for yourself, I mean, you're from, here in Aurelia and have been in the industry for, 11 and a half years, creeping up to that 12-year mark. So again, you have lots of insight to share. So thanks for having me on the episode. I look forward to next week's episode to join you.
Yeah, it was going to be great. Episode 85. Thanks very much, Sam. We have a lot to talk about. We'll be diving into some unique mortgage products for specialty income, no income products. So if you're the type of person probably that doesn't really have an income that can be verified in the traditional sense, or an income probably that is not really a job or isn't really a business, but somewhere else, you won't want to miss next week's episode. We'll be covering some unique types of mortgages that can help you get financing in a world where you don't really have the similar type of income that the banks are looking for, sort of out of the box solutions.
Yeah.
So join us then. And in the meantime, thanks for watching Canadian Mortgage Weekly Live, Canada's weekly mortgage video news podcast. And we'll see you all later. And thanks for watching. I'll just have to find the clicker here.